What's going on, everybody? How's it going? How's it going? Everything good with the audio and visual on the screens before we start jumping into it? Yeah. I'm tired tonight, but we had issues with the YouTube stream broadcaster yesterday when we usually do the Tuesday stream. So because we didn't get to do that, I thought I'd just make up for it today. We do a London stream today. It might not be as long as we usually do it. Might only do it for like 2-3 hours, you know. But I'm tired today, man. But how's everybody doing today? Yeah, before we get into it, just want to say welcome to the Capital Hungry stream. You can see everything pretty much on the layout itself, or if you read the YouTube description of anything to contact me, the Capital Hungry News Twitter, the Capital Hungry Telegram analysis channel. It's all right there, all the contact information and everything else. Yeah, you can always, as we're doing the analysis and as we're going through our main pairs, sharing trade ideas for overnight, you could always rewind this live stream to any key section when we're doing like our GJ analysis or our gold analysis, and then you can always rewatch it, take advantage of it. So that feature is also there. Make sure before we get into it, you're subscribed to the YouTube channel you are currently watching this on. Send the video a like. The Capital Hungry Twitter page here, where we're constantly posting news headlines and everything else. You can see the link right there. Capital Hungry Telegram analysis channel, right there on your screen as well. You guys are in your Fruit of Looms. Me too. Hope everybody is in their fresh Fruit of Looms. I'm in mine. Are you in yours? Alright, so we're going to be starting off by looking at some of the economic events and key fundamental points we have active in the markets, and then looking at intraday market structure and price action on some of the key main pairs that we trade, starting with gold, then going to GJ, GBPUSD, Euro USD, USD CAD, and of course US 30 to close it off. Alright, so here, just to start off on gold, any charts or any questions you have, best just to save it till after. Understand right now it's only 2 a.m. Eastern, it's pre-London hours, German market open. We still have 3 a.m. Eastern London open itself to set up our potential scalp and intraday trades throughout the night, or even if London ends up being primarily slow, these trade ideas will still be very much active for New York potentially, right? But anyways, so what I've been primarily watching and what we've been watching on gold, what's going on here? Bro, who's drawing and shit, man? But yeah, anyways, what I've been primarily watching and what I've been sharing with you guys on gold is on the higher time frames, or sorry, we've been playing this gold sell-off for a couple of weeks now, right? So it's easy to see the overall bearish market structure that's been respected, as sellers have been in control for that at least 2-week period with the macro market optimism. You can see on the weekly time frame in this overall corrective channel, we've really dug deep to this previous price sensitivity zone to the left here, which also happens to be a key yearly level. And every time gold creates a significant impulsive new low, we do have a pretty aggressive upside move, is what we were starting to take advantage of and what we were starting to anticipate as we were noticing first signs of sellers exhaustion and slowing down at a very key level around 1680 for very high risk, high reward buys. and then playing that pullback to at least retest that intraday bearish market structure. So this is a very key higher time frame level, and you're starting to get a slowdown of your bearish candles and a mix of bullish and bearish candles, creating a technical support. But this is showing us that sellers order flow is starting to decrease. They're starting to exit the market. Buyers are starting to jump in. Now, because this is at a bottom, it's a high risk, high reward entry, because you're essentially just buying the support, but you don't have any validation of breaking the bearish market structure that's been respected, right? So you could take advantage of the support buy and be up like 100 pips or something like this, where you get a double bottom here and you can get these pretty aggressive bounces. But if you don't break the overall bearish market structure that has been respected, then you can see the sellers jump back into the market to print new lows, right? So this bearish market structure has been respected since about late February and all the way into March, until we came down to 1680 and are now finally noticing more buyers pressure, because we went back above the previous low. We broke the bearish market structure that's been respected for a week after validating that 1680 support. So these previous lows, these were the previous lows. You can see we went to revisit, and before we had this upside move, this was the last lower high at this price sensitivity zone that led to this impulsive sell-off, right? And 1680 low. You can see when you're trending in a bearish market, you don't go to revisit previous lower highs. You're continuously printing lower highs. That's the point of a bearish market. So when you see a previous lower high finally now starting to get revisited or potentially breaking above there, this is showing you a lot more buyer order flow, on top of the fact that we're breaking out of bearish market structure, and 1680 itself is a very key higher time frame level as well. So for reference, let's look at what we can have potentially happen. So here, this is like a pretty decent upside move, and this is a pretty good example itself. So here you have the start of February till about the first week in. You can see from 1860 all the way down to 1792, you did have sellers in control, impulsive lows being printed, until you started to shift out of that structure. And then you have this continued upside play. But in this area, as soon as you were starting to break out of structure, you had a bit of a consolidation zone and then a continuation move to the upside, right? Now when we go left, when another previous low was created, example here, this is the end of November. You can see you had bearish market structure respected from the start of November, November 9th, all the way to the start of December, with an impulsive low created. This was your previous lower high or previous liquidity zone, where you finally where you had the last drop to create a low, right? So you can see from this point, when you finally went to retest that area, you have a bit of a consolidation, an upside move to create a new high above the previous intraday high and above bearish market structure. You get a retest at that area and failure to break, and then a continuation to the upside, creating more refined bullish market structure at that point for us to play, right? And this is something I was explaining in the trade room for the private members as well. With another member here, when we were talking about visualizing some of these gold moves to come. So, right, and comparing it to those previous moves. So when we're looking at gold now, we haven't had the cleanest breakout yet But compared to the bearish trending market that we have followed for about a couple of weeks now, we are starting to notice some more buyer's pressure developing, right? Now, this upside move from 1680 to the new intraday high today of about 1720 was a 500 pip upside move, right? Even if we were to break below this medium term zone and have a pullback to 1700, this would still be very bullish, as this would only be a 50% correction of this impulsive move, and then creating more refined bullish market structure for us to continue our way up. So I see two things that can happen here on gold tonight. Because right now we have a consolidation zone and a liquidity zone developing around our key level. So the two options are this. Either we're going to get a deeper pullback and more refined bullish structure formed, meaning we break below these candle body lows and come down to 1698, create a support, and then continue our way up after having that 50% correction and higher low formed, retesting the bearish structure, getting more buyers in the market from a better demand area, and then continuing our way up. Or we're going to consolidate, generate buyer order flow and liquidity in the market that way, break above 1721, create a more impulsive high, then get a pullback and continuation up that way. I would only really be looking for safe long-term gold sells if we came back below 1700 flat. Other than that, if you guys have been following along since yesterday's Asian market update, right? And of course the other webinars we've been doing from last week's gold session and stuff, we've been watching this bearish structure, we've been playing the gold sells, but we've been very mindful of when we can start to notice sellers exiting positions and buyers jumping in hand. So yesterday, this was the high risk buy area at 1680.5, right? This was more of your medium risk buy area as soon as you start to break above that little intraday previous lows. Your medium risk when you break above the bearish structure in 1698 key level. And the lowest risk buys now, which we were also talking about, would be above 1721 or getting a pullback, higher low formed, and then a continuation to the upside. All right. So right now, when we zoom in more on the hourly price action, we're just starting to enter a bit of a corrective state, meaning we've had some pretty solid impulsive buyers moves to break out of the bearish structure, and this price action here, this very weak mix of bullish and bearish candles, it's just looking like a minor pullback phase or consolidation phase. It's like when you have these impulsive moves, you start to slow down, consolidate, generate liquidity in the market, then have an impulsive move. You have this slowdown correction, you don't break, but you can look at the difference between the mix of bullish and bearish candles compared to the impulsive move, right? So here, we finally started to notice more buyers' impulsive candles to break above that structure, and now a liquidity zone being generated, where if we break above these highs and break above that zone to the left, there's a lot of continued room for gold upside. But what I'm being iffy about is the buys we ran from the high risk area ran great. The buys we ran from like 1698 above ran great. I'm not even taking any more trades tonight because I made a pretty good amount riding that gold wave yesterday, right? But I don't want to unnecessarily buy in this top area without the confirms, right? It's something like this. So here, this is where the candle bodies are closing and the impulsive low is created, right? But if you start to sell too early at this low, you could get caught in this ranging and pullback, where this ranging and pullback, if you're trying to sell at this low without the confirms of a break on the lower time frame or on the intraday time frames, these pullbacks can go, this could be a 100 pip pullback that you can get caught into, right? So same type of idea here. I don't want us to start ranging and people start jumping in buys, getting eager, and we continue to consolidate, because if you're jumping in buys at the high without the confirms of actual candle closures below that liquidity zone, same idea here, getting some nice bullish candle closures above 1721, then you could get caught in this ranging market or technical consolidation where, as an intraday trader and as a scalper, these type of waves can kill you on gold. Where if you're trying to scalp gold sells and you're anticipating a break of the low, yes, the break of the low can happen, but it happens potentially hours later. You don't want to be dealing with that stress of being in a sell position at this low, dealing with like hundreds of pips of drawdown for an extended period of hours, right? Just actually wait for the candle confirms and technical confirms, and then as soon as you do get that break, even if you don't catch that initial break, when you get that initial sell move, look when you get the pullback too, it pretty much comes to that area, and then you have an even more aggressive move down, right? Or when we were comparing the gold buys, I'll show you guys just to give you an easier reference, because we're trying to visualize continued gold buys unless we have a shift in structure. So let's look at that like here. So see here how we had this bearish market structure, then buyers jump in the market. See how after we had this buy move from 1784 till about 1812, we didn't necessarily get an aggressive pullback. Instead, we had this little liquidity zone between candle body highs and lows, and then you might be consolidating and ranging in there for an extended period of hours, but it's just the liquidity zone and consolidation. As soon as you broke to the high of that zone, we have our continued move to the upside, respecting that bullish market structure that's starting to develop, right? You don't start to get an aggressive pullback till really here, and then sellers jump back in the market. Or like something like this. This is a great example. This is very, very similar to what we are seeing now, all right? For the potential of like a order block buys, right? So bearish market structure respected for a couple of weeks, impulsive lows, etc., etc. You finally break above that structure, and in this area, after that impulsive move, similar to what we've seen today, you have this consolidation zone between these candle body highs and lows with a failure to break above for an extended period of hours. Now, does this consolidation zone mean that gold is a mass sell-off? No. You're just having liquidity enter you're just having order flow enter the market to have an impulsive move to potential upside, right? So here you had this impulsive move. Instead of getting a more aggressive pullback and then continuation up, you have a liquidity zone, a breakout to the upside, where even if we get this type of breakout overnight, that's 200 pips. You know what I'm saying? Like, this is like an 1840 to almost like an 1870, 300 pip breakout, where then you finally get some signs of exhaustion at a previous price sensitivity area. But that pullback, where does it go to? Straight to those order block lows. Fails to break and it goes even higher. So we are in that predicament now. We are starting to show more buyers pressure and buyer order flow entering the market and a potential break of that bearish structure. But it's either we're gonna break to this order block and consolidation low to give us a deeper pullback, or we're gonna wait patiently for the break of the high to take another impulsive move to the upside. And even if that takes us to the next like intraday range, we're looking like another 150 pip move to the upside. I'm not really in a sell bias now in gold. We've been in that sell bias for about 2 weeks with that bearish market structure and that macro optimism, and it's been running well from like the 1800s area. But now we are starting to see some more buyers momentum, and we're starting to see a bit of an intraday order block being created here, where even here you can see the flat candle body support, where This is pretty much between these candle body highs and lows is the liquidity zone we're watching. So once you get bullish candle closures above here, you can validate this as buyer side liquidity. Right? Exactly. So now when we're looking at gold in the lower time frame, we have that bearish market structure that we identified gold broke out of, right? We have this bullish upside move. Can you say how you're going to take the trade? What do you mean? You fucking press enter. I mean, I am saying how to, what trade I'm looking for and how to take it. Like, that's what the analysis is for. You know what I mean? Alright, but anyways. So. Yeah, that's what we're waiting for. But anyways. So it's either we're going to just consolidate here and let gold do its thing. And break above 1721 and start taking those buys up, right? And we'll be watching on the 1 minute. No, we don't look at 30-minute candle closures or like anything like that. We look at 30-minute candles, hour candles when they are opening and closing, but not in the sense for entries. All right. But anyway, so it's either we're going to get that play and wait for the break above these candle body highs and buys above 1721, or we're going to patiently let gold do a pullback, create more refined bullish structure, and then continue our way up. All right. With the current price point we're seeing gold at now, and the fact that it's starting to consolidate a bit, I don't want to play a guessing game in this little minor range, because you can see a bit of the hectic whipsaw movements up and down, like 20 30 points, right? 20 30 pips, sorry. Obviously, from this low point, we had very clean price action. You had a flat candle body support at your high risk buy area. You broke above the 1 minute price sensitivity zone for your medium risk buys. You break and retest above the bear structure for your safer buys. And during this fashion, you were continuously trending bullish. Right? You're just having minor pullbacks in the lower time frame bullish price action and continuations up. Now it's getting a bit messier here, where I would want to see some more confirms of, we could watch 1715, but above 1721 is the safest buys, or if we get a deeper pullback buys, you know? Those sells ran great for 2 weeks. Those buys ran great yesterday, like a 400 pip run. You know what I mean? So there's no point being greedy or eager. I'm personally not taking any trades today, but I still will say any trades that I see that look good to take. But I'm not taking any trades today. You know what I mean? But give me 1 second. I'm just a little bit under the weather. I just gotta go blow my nose and shit. Getting a little nasally here. Yeah, just give me 1 second here. And then we're gonna go do our GJ analysis and other pairs as well. Yeah, economic events. We don't have anything overnight. Yes, Mr. Robinhood, we do have the US core CPI, but that might not impact us overnight looking for scalp or intraday trades, because that's not till New York session, of course. Like, there's still another 6 hours away. So hopefully, for our sake, we could get some nice scalp trades on gold within that time period. But maybe that CPI, like you said, will give us that deeper pullback on gold, right? But that is obviously at 8:30 a.m. Eastern. Canada interest rate at 10 a.m. Eastern, and then 10:30 a.m. Eastern U.S. crude oil inventories. We do not have any economic data. We do not have any economic data over London or Euro session itself. And the key fundamental points have been the market optimism, how we've been watching our safe haven currencies and precious metals, but now they're finally starting to show some light. The $1.9 trillion stimulus. Main fundamental focus has still been the vaccine rollouts and global COVID control. We do our analysis on the higher time frames, like for market structure, higher time frame key levels, and price action as well. But for entries, we start watching the lower time frame, specifically the 1 minute, at our key areas of interest. On gold, we're looking if we can break above 1721 for safer buys, or get a deeper pullback to 1698 and start watching price action on the lower time frame for safer buys. If we were to come down to 1698, I want something like this formed. You get pushed down of price, a flat candle body support, and then push back up, right? Or if we break above 1721, I want something like this, where you get a pretty impulsive break, a retest, and then an even nicer move to the upside. All right, but the key price points I'm looking at are 1721 and 1698, but also obviously this current 1715 key level we're sitting at now. We are having a bit of reaction here. It's only pre-London hours. We still have London open itself and about 33 minutes, so we're not rushing anything, especially since a lot of us who took advantage of those gold buys yesterday. First, let me ask, who watched that Asian session webinar? Anybody watch the Asian market update webinar from yesterday? This one. So remember when we were talking about the gold buys, like the high risk buys, medium risk buys? So if you guys got to ride those buys from yesterday, right? Remember to stay emotionally neutral and don't over trade or over leverage, because if you got to ride those buys from yesterday, you got a pretty good run. And this can make you greedy to want to make even more, even faster. And right now, it's not like that. It's not like that overnight we peaked this high and we had a great pullback and like clean buy opportunities right now. Now it's starting to get a bit messier in this higher time frame range, where I still want to take further buys above 1721, you know? Yeah, the buys I took, if you guys want to see, they're the same buys that I was telling you guys. But they're all over here. I only took those deposits are IB rebates. You know how like I do an IB for Pacific Union where you guys use the link? That's why like I'm not depositing $157.22. That doesn't make any sense. Some guys like, why'd you deposit $157.22? I'm like, I didn't, man. But anyways, these were the gold trades I were taking. I only took 2 losses. One was a rushed gold buy, where I didn't patiently wait for a good entry, and then the other was a stupid counter trend trade sell, which was just a dumb trade. You know what I mean? But I made $14,000 just yesterday alone, so I don't want to be. over trading or trading based on a high or based on feeling greedy and trying to make even more profit. I want to wait for the next high probability setup so I can make an effective decision, right? Those setups from like 1680, the high risk, the medium risk, the low risk, that was great. Now, once we've peaked our 1720 higher time frame key level, I want to see if we can have a continuation to the upside above 21 or a pullback to 98, right? Hello, Trade for Grow. How you doing, bro? You took 48 on, what were you trading? Euro USD or gold as well? Just let me go to the washroom for 1 sec, guys. And then we'll look at GJ. Marcus, that was a big balls entry. That's why it was only a 2.5 lot. You know how I use like a bit bigger lots now? That's why that was like a 2.5. It was a big balls. It was just a bit below the key level. I saw it as a liquidity grab at that impulsive low. You know what I mean? I could have waited right at the key level and been a bit more patient, but that was a big balls entry at that high risk entry area I was telling you guys. But because it was a high risk entry, you can see that I heavily dropped the lot I was using. Normally I'm using like 5 lots, 10 lots nowadays, right? So for that, as I took that entry, I only used a 2.5 lot, and I only had a 15 pip stop loss on that 2.5 lot, meaning I was willing to lose about roughly $350, you know? And instead it ended up paying like $6,000. So it was a great risk versus reward, high risk, high reward entry. That's just how it goes, right? And then I started scaling in as we went up. I had a 10 lot at so you know how I was scaling in and I made 14K? I had a 10 lot here that I closed right when I went to sleep. This was the normal trade. See this one? Fam, 1700 10 lot. It was right before New York. I closed it for 7 pips because I was getting so tired. You know what I mean? I was so tired. We just traded London. We ran the gold buys up. You know what I mean? I had like 200 pips on this position. I had like 200 pips on this position. You get what I mean, right? So I had this 10 lot because I already made good profit. I was like, fuck it. I'll just risk 15 pips of my, I'll just risk $1,500 of my profit, which is essentially a 15 pip stop loss on this 10.5 lot. And I was so sleepy. It was pushing up. It was like up $780. I was like, fuck this, man. Fuck that loss. I don't want to take that $1,500 loss. So I closed it, right? When I woke up, gold was at 1720, man. Didn't do no pullbacks, didn't do no liquidity grabs, didn't fucking do nothing like that. You know what I mean? So that trade, if I held it and woke up again, obviously shoulda, coulda, woulda. It doesn't matter what you want to say after the fact. But just that trade alone would have gave me my 20K and I would have made like 35K yesterday. But I bitched out. I was so sleepy and I didn't want some bullshit to happen. If you want to see these trades, like the entries, the price points, the server I trade on with Pacific Union or anything, just join this Capital Hungry analysis channel and go look at them. You know what I mean? I was just talking about it. Like, what are you guys talking about? Yeah. Give me 1 second here. Yeah, any trades I take, I think I took some off scalps here, um, like on Euro USD, but that was like the same buys that we were doing in the London chat. Remember, private chat, those Euro USD buy scalps. I could have held that too for 40 pips, but it was the same idea. It was coming towards like the early morning New York, so I just quickly took the 10 pips on those and as a scalp during London session. But usually I'm obviously going to take the same. It wouldn't make sense for me to give analysis or like buy analysis on gold to people who are paying for it and then for me to take sells or something, if that's what you're asking. Like, that'd just be weird. People would be like, what the fuck are you doing? You know what I mean? Or for me to like send people GJ analysis or gold analysis or like Euro USD analysis, and then I take some like German DAX trade. It just, people be like, what the fuck, Jeeve? Like, how can we just share that with us? So any trades I take, I don't send direct signals because that's illegal to give direct financial advice without a license, but it all has analysis that comes with it, either through a Zoom session or through an intraday trade ideas webinar, whatever it may be. And I'm only giving trade ideas on main pairs that I also trade. I give some more higher time frame trade ideas on other off pairs like AUD, USD, and all that stuff, but every week we do like these London Zoom sessions, New York sessions, market update webinars, higher time frame analysis. So I'm following the same trade ideas and analysis that I'm obviously giving to the group, right? It would be pretty, it would be pretty stupid to do otherwise. It just wouldn't make sense, and it just wouldn't make sense. But anyways, all right, so gold, we're good with the gold analysis. If we're just waiting for safer buys above 1721. If we break below, honestly, if we break below 1708, there is that corrective sell scalp down to 1700 to give that 50% correction and possibly create a more refined higher low. So like, meaning if we break below 1708 and then create that higher low similar to the support created here, that would be creating some more refined bullish market structure on the intraday time frames to revisit these highs and continue higher. Or we just simply consolidate, generate liquidity, then break out above 1721 buys. But yeah, we're going to be keeping an eye on that, not really touching it in this little intraday consolidation we're starting to see created. GJ. Now, with the market optimism, which has relatively kept our safe haven currencies like the Japanese yen and the US dollar and Swiss franc on the higher time frames bearish. The Japanese yen is still extremely bearish, and our global stock markets are still very bullish. The global stock markets have either just been ranging at previous highs or creating new highs, like US stock markets printed new highs, right? So what this shows us when the stock markets are... What the fuck is this, man? Bro, stop adding me to Forex groups. Leave me alone. But anyways, what this shows me, when the stock markets are extremely bullish, is investor confidence is high, especially hand in hand when you see our safe haven currencies bearish. This is why a pair like GBPJPY or EURJPY or AUDJPY, they're all going to look very similar, because you have your risk currency as the primary, and then you have your safe haven currency as a secondary. Give or take some little minor changes here, you know what I mean, with price action, because obviously they're not exactly the same pair, okay? So with that, all we've seen is continuous highs being printed by buyers, pullbacks, and continuations to the upside. Even with the start of the pandemic markets early on, you can see we were having more aggressive market waves, creating better, pushing price down to better demand areas before having continuations to the upside. After December, the pullbacks on GJ became very minimal. You would just have these minor pullbacks or consolidation phases and breakouts to the upside. So with the vaccine optimism, with the Brexit optimism, with that fundamental weakness in the Japanese yen standalone, there has really been no reason for me to sell GJ. I know there's people in the Capital Hungry private chat or on the YouTube stream that sometimes when GJ peaks a new high, we identify a pullback phase or a corrective phase. This corrective phase can sometimes run for a couple period of days and hundreds of pips where you can take advantage of these sells, right? We've seen those pullback sells from high plays happen many times. Like for example, here you peak a high, you have some aggressive sell pullbacks that don't break structure, and then you continue to the upside. Here, same idea here, you peak a high, you have a pullback that doesn't break structure and revisits a previous low. This pullback itself, it's like 70 pips, but then you have a continuation to the upside. I've personally just been patiently waiting for those pullbacks to happen or consolidation zones and then breakout above. I haven't been doing any counter trend trading. Does that mean counter trading is not possible? No, you can counter trend trade if you want. But to me, it's a lot easier to play with the investor behavior and the smart money fundamental sentiment, which in current time is market optimism. That market optimism is going to have our risk currency against safe haven pairs continuously printing higher highs, doing pullbacks, creating higher lows, and following that structure. So why not ride that train with the smart money? Yeah, you can counter trend trade, but is it really ideal? Not in my opinion. You know what I mean? I feel like a lot of counter trend trading comes from ego of trying to call a top or trying to call a bottom. Now, you can effectively call a top or bottom by observing what price you're reacting to. If you're coming to a historical price sensitivity area, if you're starting to notice exhaustion when you're looking at your price action, if you're starting to see a shift in lower time frame structure, there are certain ways to identify tops and bottoms alongside key levels, price action, and so forth. But there's too many people who try to call a top or a sell-off. For example, when GJ did this pullback at the end of February, end of month rebalance, the flow move, you know how many people started calling GJ a massive sell-off, thinking like that bullish structure was going to break and we're finally going to see massive GJ sells and a shift in that trend without the fundamental reason behind it, or without understanding the market timing, that this was just an end of the month pullback and setting up for the new monthly candle, right? So you have to be very mindful and observe the markets objectively from a technical perspective, but also have that bit of a macro fundamental understanding. And that could even come from quickly scanning like what we're doing here. You look at global stock markets, or specifically UK stock markets, still pretty bullish. Investors are still pooling money into the UK stocks, into these different UK corporations for potential profit. You still have that Bank of England support for GBP currency and UK's economy. When you look at the Japanese yen currency index standalone, it's in bearish structure. It's in bearish price action, right? We can clearly see investors taking money and liquidity out of the safe havens and putting it into the higher risk, higher rewarding investments like the equity markets. Yeah, that's a good question, UN. Now, if you're counter trend trading, you have to be mindful of a couple of things. One, that you have to understand you're trading against the trend. Two, what your trading style is. If you're a scalper and you're aiming for 10, 15 pips and you can stick to understanding that counter trend trade and be in and out of that 10, 15 pips, by all means. If you wait for your confirms, if you catch your play in that sense, those trades are very much available. But there are too many people who will counter trend trade. For example, a GJ sell, right? And then as soon as GJ starts falling, their counter trend trade or that initial 20 pip target, all of a sudden comes that they want to hold it to a sell-off, right? And they don't objectively watch price action, and price can come right back to their entry. So a lot of the issues with counter trend trades from a psychological perspective is people start to marry that bias and ignore the actual trend, because as soon as you start to enter a trade, you want that trade to win. So what can happen psychologically is a counter trend trade can fog or fuck up your main view on the trend or the bias. Does that make sense to everybody? Right? It can mind fuck you. That's a good way to say it, Adonis. Because you're in that sell position, you want that sell to drop, you want GJ to melt, but the higher time frames are bullish, the fundamentals are bullish, and then if you don't exit positions where you're supposed to at that previous demand area and you're still holding, then when price comes back to your entry, you're going to say, what the fuck is going on? You're going to be angry. Right? So if you are counter trend trading, those confirmations can be there, those trade setups can be there, but you have to be in the right mind state to understand, hey, I'm trading against the trend. You have to come ahead of time with set take profit goals of, I'm only looking for 20 pips on this counter trend trade, then I'm in and out. If it drops another 100, that's fine. I took my 20, I'm out. And you can't start marrying that bias just because you're in that trade. So that's all I mean. I primarily like to wait for that counter trend trade and that correction to happen, So for example, this pullback from 150, you had this impulsive sell, a pullback to create a lower high, and then price come down to that previous low and fail to break. As soon as you break above that bearish structure, you have easy buys back up to the previous high. Right? I'd rather wait for that with the trend. Right? Something like this. And this is like this is more, instead of having an aggressive pullback, this is like a smaller pullback. You peak a high, you start to get a bit of a correction and pullback for like about a day. February 3rd to February, like, you know what I mean? Very slow price action, but you do have sellers in control for about 50 pips. As soon as you break out of that structure and retest that high, you have a continuation move with the overall trend. I'd rather wait to play with the trend and play with the fundamental sentiment. Like, for example, you guys aren't going to see me try to call a top or sell off on our risk currency against safe haven pairs unless I see a war on Iran fundamentally come to the scene, unless I see COVID mutate into a zombie infestation and we have another global lockdown, or unless I see Brexit, for GBP specifically, unless I see Brexit do a full 180 again and go right back to the drawing board and say, hey, this Brexit deal is not looking good. It's not going to be finalized. We're going back to all these issues again. Then with that fundamental reason, I could see reasoning with that fundamental catalyst. I could see reasoning for investors to say, all right, I don't want to long GBP anymore. I don't want to buy GBP anymore. We have lockdowns. We have more lockdowns coming in, or COVID just turned into a zombie infection. We have Brexit back into the scene, or Boris Johnson just died from COVID. You know what I mean? Whatever it may be, there has to be a fundamental catalyst that will want to shake investors out of the current trend. Because if you're a GJ buyer, why the fuck would you want this to stop? If we don't have any fundamental fear, right? The word fundamental has been used in so many unrelated sentences. No, it's true. Like, if you don't have any fundamental market fear, any real world economic market fear, right? Why would these investors who have been riding this market optimism, these essentially GJ buys, why would they want it to stop? Why would they start massively selling it off now? For what reason? Right? Or when you're looking at the global stock market, this bullish run on the stock market ever since the COVID crash, where you've just had minor pullbacks to demand areas and continuations up. Ever since that fundamental fear of the COVID COVID was priced in, right? And then we had central banks come in to support these respected countries and economies, and then we had market optimism come into the scene with a flood of vaccine headlines. All of a sudden, every single country 6 months after COVID is shitting out a vaccine. 10 different vaccines active right now in the markets. You know? So why would investors want to stop this greed train? Investors who are in from 18K, investors who are in from 23K, investors who are in from 26K, why would they want to stop? You're just going to see these minor pullbacks and corrections, possibly usually towards the end of the month or with a fundamental catalyst. Like, for example, we had a short-term pullback on US 30 from these all-time highs. So we peaked all-time highs, and then we had buyers exit positions at these all-time highs. We started to create this pullback with also a fundamental catalyst of Jerome Powell bringing short-term negativity that dropped down the US stock market. Remember? This didn't break the overall bullish structure, and then guess what happened the following day? Oh wow, record-breaking NFP. Who the fuck would have guessed? It's not about if it fits my reasoning. First, you assess the fundamental catalyst. So let's just say on GJ here, right? For example, You get a fundamental catalyst of market fear. Let's just say for GJ, that's Boris Johnson getting COVID again. Boris Johnson gets COVID again, right? So we have this short-term fundamental catalyst of Boris Johnson getting COVID. Just to theorize right now. You see a sell-off on GBPJPY, but it comes all the way down from 150 back to these previous lows and fails to break. Was there enough fundamental fear from Boris Johnson getting COVID to technically shift market structure? Or did we just have that fundamental catalyst create a pullback that failed to break the previous low? Do you understand what I'm saying? So what you do, and the same idea with what happened on Bitcoin. Remember how everybody was saying Bitcoin is crashing, Jeev? Bitcoin is crashing. Last week, when you guys come here, everybody when Bitcoin fell from 55k, 60k down to 42k, everybody was panicking at this simple pullback that Bitcoin is crashing, Bitcoin's gonna dump. But all Bitcoin did was simply retest that previous high, didn't break structure, even when people were like, oh man, fucking Tesla's doing this, Janet Yellen said this about crypto, whales are cashing out. You had this pullback to those previous highs at 42k, and then what did you have? When you look at Bitcoin now, it's back to 55k. Price pushed down to a better demand area for buyers to jump into. You have to remember, at these new highs, similar to what happened here, buyers are cashing out. Nobody stays in the market forever. Eventually, you want to reap your rewards. What are you going to do with your fucking money in the markets forever? What's the point? Right? So you have buyers exit positions at those highs, this aggressive pullback that goes to revisit that previous high point that Bitcoin had. No different than when you had this pullback phase and continuation up, right? Same thing when we had this fundamental catalyst on the US stock market. So we had a high printed. Then Jerome Powell came into the scene and brought some negativity that dropped the stock market and caused buyers to exit out. But did that drop in the stock market break previous low? These are the questions you have to ask yourself when a fundamental catalyst comes into the scene. Did that fundamental impact of Jerome Powell bringing short-term negativity, yes, it dropped the stock market, but did that go to revisit a previous low? No. Did that break bullish market structure? No. So to me, all that was doing was creating a dip for buyers to jump back into the market, especially when you could anticipate the following day after that, we were going to have a good NFP. Remember, whoever's in the Telegram chat, I sent that in here. Look. This was the Friday. So we're just searching NFP here. So here, I was saying this. Look, now after Jerome Powell caused that dip from all-time highs on US equities for the new months, what's tomorrow? Oh yeah, US NFP and jobs data, which will be optimistically good and bring stock markets right back up from this dip as we didn't break the structure. So Jerome Powell caused this dip on Thursday. Friday morning we had record-breaking NFP. That's not it, but you can see it here. Looks like I was right about NFP. The 3,500 buys ran well. And you can see it. Jerome Powell dipping the markets right before NFP Friday. 3,500 key level. The following day, amazing best NFP in months. That dip gets corrected just as fast as it happened as soon as you don't break the overall structure. So when you have a fundamental catalyst come into the scene, like let's just say overnight, we have some negativity regarding UK's economy. If we see a massive sell-off, that's fine. If we see a aggressive pullback from these new highs and we see a 150 pip, 200 pip dump, the questions I'm asking myself are, technically, we just had this fundamental market fear come into the scene and we saw buyers exit positions and sellers come into play and a downside move. But did that downside move break previous lows? Did it break bullish market structure? If not, it's a pullback. If it did break structure, now I'm starting to see a potential shift in sentiment. Now I'm starting to see that that fundamental fear catalyst might have been big enough or strong enough of a catalyst to actually shift the investor bias. But we haven't had any fundamental fear catalysts since initial pandemic markets that have caused any shift in this optimistic trend. Even like see here, this was early COVID days. March was the initial COVID impact. We can say that initial like 6 months was early COVID days. During that time, we were having these upside moves and extremely aggressive pullbacks due to the uncertainty with COVID. Right? So look at this. You peak a new high and then you have uncertainty with COVID. At that time, you still had negative Brexit headlines. You have such an aggressive pullback. But did it break the previous low? Did it break that bullish market structure? No, it did not. And then you continue right back up to that high. Where since that point after that, the pullbacks have gotten smaller and smaller. So now, it's 2:58. We're coming towards London Open. And you can see that we're still respecting lower time frame bullish market structure. Right? We've been respecting this lower time frame bullish market structure since those 148.2 lows, riding it up since that point, where even if GJ was to do a more aggressive pullback and break below 0.800, 150.500 buys, 150.8 buys, above 151 buys, above the previous highs, buys. With the weakness in the Japanese yen, with the structure of our risk currency against safe haven pairs, our optimism with the global stock markets, we are still in a GJ buy bias. Either looking for a deeper pullback to 150.500 buys, just a rejection at 150.800 buys, or a break above 151 buys. We have to be very mindful at these new highs created around 151.2. I would only be looking for sells on GJ if we break below our higher time frame key level at 150.500 and our bullish structure. This would show me more sellers pressure and more seller orders entering the market for a deeper pullback on the higher time frames. Otherwise, anything above this bullish structure, I'm still seeing for buy entries at 0.5, 0.8, 151 as well. Let's just look at how this intraday candle's closing on the hourly here. So you can see right now, we just had London open up and it's pushing down first without a upper wick. So it's grabbing liquidity to the downside first, and we don't have much of a technical upper wick created, and we're still maintaining that bullish market structure. So if we could retest 0.800, still buys. If we could come and break above 151, I still see that scalp buy squeeze to at least revisit these previous highs. All right. So we're going to be watching that patiently as it's London open now. Gold is just ranging between these highs and lows right now, as we can see. So we're not taking any trades unless we get a deeper pullback to 1700 or a break above 1720. GBP USD. Just to quickly summarize the higher time frames, GBP USD is exactly the same as GJ because you have obviously the British pound as the primary, and then the secondary follows that similar concept as the US dollar is primarily a safe haven currency, just like the Japanese yen or just like the Swiss franc. So what have you primarily had since that March COVID crash? Buyers printing highs, pullbacks, highs, pullbacks, highs, consolidations, breakouts, consolidations, breakouts to the upside, right? Now, from these new high points, we have started to enter some more bearish corrective structure, and we have not seen as clean of upside as we have had on GJ, because what happened specifically on this pair? We had more short-term strength with the US dollar standalone. So when you come here, you can see that yes, the US dollar starting to weaken now, but even though it's very bearish on the higher time frames, from the Federal Reserve sentiment and Jerome Powell's comments, the US dollar had a pretty aggressive cat bounce from the start of March, all the way up to 92.4 to create that monthly candle, where the Japanese yen has just been bearish. Okay, so you can see that GJ on the higher time frames, where GJ already did its aggressive pullback and then upside move, it's like GU is just lagging a bit behind right now. But what can we identify with this pullback phase? Did this pullback phase break below previous highs? Or let's not call it a pullback yet. Did this sell-off break previous highs? Did this sell-off break higher time frame bullish market structure? And for me, no, right? So we have this lower time frame bearish market structure that's being respected so far, but this is a very strong demand area for buyers to start entering the market, where if we can break above this previous candle body high, as long as we have US dollar weakness and the market's still fundamental, all we're looking to essentially start doing once we break out of that corrective bearish market structure is go back up to previous highs. Just like GU has been trending since March. Even when you have some aggressive pullbacks, as long as they don't break structure, you can see the dips get bought up and you go right back to that high. So as long as we didn't break structure here, all we can identify is from this high, buyers exited positions. From this high, buyers exited positions. The pullback was more aggressive here due to Jerome Powell's sentiment giving the US dollar some short-term strength, right? So now I'm looking at this. I'm looking at buys, honestly, around this 387 area, and I'm starting to notice some minor lower time frame bullish structure being created from these low points, right? So on GU, I would not be looking for GU sells unless we came below 1.38. If we still respect 1.38600, I'm looking for potential buys, and the safer buys above 1.39200. Because we are starting to show that potential demand area being respected and buyers entering the market, as well as dollars starting to weaken a bit, but we have to be very mindful of that. So let's keep an eye on that there. We're going to be watching the dollar standalone overnight. So I'm only looking for GU sells, really, if we came back below 1.38. Otherwise, primarily looking for a pullback, failure to break this medium-term zone we have labeled out. Even if we create a double bottom here, and then safer buys above 1.393. If we even the safer buys above 1.393, that's an 80 pip range to our next higher time frame key level. So safest buys above 1.393, and I want to see the reactions around these low areas here. Gold in the new hourly looks like it could potentially give us our deeper pullback. Obviously no safe buys above 1721 just yet. GJ just a bit messy on the lower time frames here. Nothing significant to like take an entry on yet. GBPUSD, we're going to be watching this zone as well as 39300 area. And Euro USD. Now, Same type of main fundamental concept of a risk currency against a safe haven pair, except that EU, instead of having aggressive pullback phases, EU has more consolidations than breakouts, while still respecting overall bullish market structure. Okay? You can see from these high points, we started to notice buyers exiting positions, creating a more aggressive pullback. This pullback essentially went to revisit this previous price sensitivity area where we are starting to see some strong reactions and buyers potentially jumping back in the market from this more favorable demand area, where if we can start to notice more buyers pressure and overall markets are still optimistic, we want to go back to revisit these previous highs. Just like when you had these highs created here, and then you had this pullback phase and a double bottom created, as soon as you have buyers re-enter the market from that demand area, you go back to revisit those highs, right? So now, you can see from that key level retest point, 1.18400 is a higher time frame key level. We had a very strong reaction from that point. And now we do have the potential that we could create a double bottom or a higher low and start noticing some more buyers momentum and buyers pressure. I would only be looking for sells on Euro USD at this point below 1.8400. Otherwise, I am looking to see if we can come back above 1855 and break this little minor bearish structure, where if we could come back above this 1 minute price point, I would like to take scalp buys back up from there or from 18400. I'm sick. That's just my, you know what I mean? I'm a little nasally right now. That's why I got a cough and stuff. It's just been lingering. It's been lingering for like the last few days. But I'm feeling a lot better. But I've been drinking water. So yeah, just gonna be watching that there. Yeah, and just let me go to the washroom, then we're gonna do our US 30 analysis. And so far, as per headlines and just London Open so far, like 10 minutes into London Open right now, not anything crazy going on. When we're reading these headlines to the left of the screen, they're just some generic economic headlines. Nothing too much that's impacting what we are trading. Coronavirus. UK Transport Minister Shaps says test and trace has not been very expensive, but we would not be better off without it. Yeah. Yeah, not too many crazy headlines over the last hour or anything so far. Yes, give me a second to fill up my water bottle here, okay? We'll just keep it on GJ for now. Just because if that breaks above 151, that will give us a nice buy play back up to the previous highs for 20 pips. 151 is right here. And then gold, we're not touching in this higher time frame range. Who's ready for the consumer price index, food and energy? That's not till another 5.5 hours. So clearly you're ready for it though. Watch GJ though, if we break above that 151 for that squeeze. But yeah, let me go fill up my water bottle. All right, what's going on? GJ teasing. No, we have to get the actual candle body closures above 151. Right now, we're still closing below it. We need some 1 minute candle closures above, show us some more buyers momentum, and then we can have that extended move to the upside. Gold looking like it's still doing our deeper pullback here. New 15-minute candles just opened up. GBP USD, Euro USD. Alright, let's take a look at US 30 potential trade options here. So I personally have a level on US 30 at 31,700 and 31,900. You can see we came pretty close to that 31,700 retest. I still would like that for further buys up. We were only about 40 points from retesting that area on the dot. The audio is off. Hello, hello. Hello. You guys can hear me? Should be. Okay, cool. Yeah, so as I was saying, I would have liked it if we could have got a retest right on 31,700 on the dot for buys, but it doesn't look like we're going to get that retest. So now I'd be looking for continued buys on US 30 if we can break above this zone and 31,900. So either we pull back again to 31,700 buys, or we just range around here and then break above 31,900 buys. I'm currently back testing a swing strategy in demo on the daily chart after 10 trade after 100 trades. Yeah, that like 100 if you're back testing it, then the more trades the better to back test it. The more data you can have, the better, right? Yeah, US 30 still very bullish. I don't personally like selling the US stock market. I see it as primarily bullish, and I'm waiting for either 31,700 if we do get a deeper pullback retest buys, or above 31,900 buys back up to those previous highs. Okay, that's what I'm looking for there. Oh, you took that higher time frame order block bounce off the 1 minute? Yeah. It made sense with the rejection we had in that area. Oh shit, my window's open. Let me close that. That's why. You guys might be hearing some background noise. No, this made sense. I'll be checking out any charts and stuff you guys send afterwards, so don't worry about that. You know what I mean? GJ's looking a lot better now as well. We had some candle closures above 151. We retested it as well. If you didn't catch a breakout entry, if we could break out a bit higher and get like a 10 pip close above and then retest, it's also still looking good. If you like didn't get this entry. You're looking at me through the window. Euro USD, we're still waiting for that pullback to 1.184 or above 1.188. No, I was just trying to get some fresh air. I've been under the weather. That's why I'm a bit nasally and coughing and shit. I know it can be annoying to deal with. But yeah, if you guys want to send any charts or anything, now would be the time. If you guys want to send any charts, anything along the lines. I had the window open. I'm sitting here sweating for no reason. Yeah, London so far, like 20 minutes in, fairly weak, fairly weak. A little, not really a fever anymore. I was just sick previously, and I'm still like just getting through it, I guess. I'm feeling a lot better. It's just like, you know what I mean, when you're still like a bit nasally and shit like that. Yeah, Andrea, if you want to send a chart on EJ of some potential analysis or anything like that, then I can reflect on it as well. But other than that, like we already look at Euro USD, you know what I mean? GBPJPY, gold, GBP USD. So, but if you want to send a chart, then I got no problem. Or unless you're talking about if you want me to do a full analysis on it, then I can do that in the private chat. I think I did a Euro JPY higher time frame analysis fairly recently in March, no? Yeah, so you can check that out too. All right, GJ's still looking good for us to slowly make our way up here to 151.200, but I don't like this price action here, like this strong bearish rejection candle, and I don't like how we haven't had that significant of a breakout. I would like to get like maybe a more impulsive breakout to the upside, and then a possible like retest and then continuation up, or just a straight 20 pip 1 minute candle. What are you waiting for here? Yes, sir. Oh, you want to break out into some new highs? That would be nice if we could break out into some new highs. Yeah, a nice 20 pip 1 minute candle would be ideal just to bless everybody. I'm not in any trades. I'm not taking anything tonight. I made enough on gold yesterday, and I just feel like a little bit shitty after I woke up in the evening, you know. Yeah, don't mind my nasaliness and all that. Just deal with it this time, you know. I know I sound like a inbred an inbred loser right now, but just focus on the information I'm saying, not how I sound. I sound like a dude sitting in his Fruit of Looms, trolling somebody. 10 pips on GJ. Reno, you gotta buy. Reno, you got your 10 pips? Come on, give us that 1 pip, 1 minute burst to 0.200 highs. Bring that volume in. At least 10 pips for a scalp is something for now. And if you're up 10 pips on GJ right now, then obviously we want to go to the 0.200 target, but it's always good to secure some partials right now, then set risk free. So let's see if we can keep making our way up here. It would have been nice if London pushed down to like 0.800 to give better entries, but we didn't get that deep of a pullback. Gold, we're not touching yet. Gold, we're only taking buys if we come back above 1721. If we break below 1708, all right? I'm going to tell you guys this. There is a high risk, high reward sell counter trend trade, like counter the current bullish momentum. Sell down to retest 1698 possibly. But I'm primarily me. I'm waiting for gold buys if we either get a deeper retest to 1698 to create a higher low, or I'm waiting for gold just to consolidate and do its thing and break out above 1721 buys. You can see in this consolidation range at these new intraday highs peaked on gold, the heavy whipsaw on the lower time frame that can be very messy to deal with, right? GJ as well might give that pullback to retest 151 for the new 30-minute candle here as well. That, yo, when I tell you guys to secure, is it not usually always the best time for a quick, like, for that quick impulsive secure scalp? I swear every time I say secure, the market also closes positions. Oh, don't worry. So, and then now I said fuck you, Jeeve. But anyways, the worst case though, you guys are still holding runners. Do you guys do the same thing as me now with your stop losses? Like, do you put it right on top of the entry, or do you put it a bit in profit? Because if you do what I do and you put it right on top of the entry, then obviously this isn't gonna take you out, right? So you're still good for now on those runners. I fucking jinxed it. Yeah, if you guys want to send charts and stuff, just send the TradingView code in the chat. Oh, you took the GU buy scalp 10. Oh, that's 20 pips right here, eh? Off the level? That's a quick 20 pips on GU. Euro USD, we're only taking buys from a 1.18400 or above 1.1886. All right. Yeah, I think GJ on this 30-minute, if the 30-minute closes as is, which would be ideal. I don't want to jinx it, but it would be ideal for this 30-minute to close as is bullish. The following 30-minute, just because this to me is looking like bullish liquidity generating in the market, and now we're starting to have that breakout where if the 30-minute closes bullish, the next 30 to grab liquidity and just make a quick lower wick, then continue back up to these highs would be ideal, you know? So I don't want to jinx it. Because like we've seen GJ last minute of the 30 or hour candle do a quick 20-minute flip. So I don't want to jinx it. Because that's the currency index. It's not like the active market. What do I think about trading bots? Like automatic, like what do you mean trading bots? Like an indicator, or you mean like, yeah, I don't want to jinx it. Hopefully we get a nice bullish close like this, and then the only thing we have to be mindful about, guys and gals, I know obviously jinxing isn't real. I'm just joking around, fam. Obviously. But the market be listening sometimes, you know? The only thing we have to be iffy about is this area of previous highs we are digging into, where we could dig a bit deeper into it and then have buyers exit positions again and create a pullback. Okay? So that's the only thing we have to be mindful of. Obviously, the safest buys, or the best thing we could see, is if we could get some candle closures above these previous highs to show us more buyers momentum, you know? No, I took some Bitcoin buys when it was at 30K up to 40K. That was about it, when I was back testing it and scalping it. I've been back testing Bitcoin just because it's been so liquid, and it has pretty good spreads and nice moves. Like, it moves like pretty good, like just like any other trading instrument, you know what I mean? I don't really trade any altcoins or anything like that. But to me, okay, so this 30-minute now. Oh, it already pushed down to make that quick lower. But all right, anyways, this 30-minute closed nice, closed nice and bullish. If we can tap 0.200, it would be ideal. But we could also get that pullback to 151 again as well. So we just have to be very, very mindful as we're digging into this previous high area. All right. If we don't break these lows on Euro USD, I could see buyers starting to jump in. But we will need to break out of that minor structure, and we'll get a nice buy squeeze on EU above 1.1866 on the 1 minute. Some nice buys coming in on EU. Yeah, sure. I'll check out these charts you guys are sending. No problem. GU might GU might finally break the bearish structure. Oh, that corrective structure we're talking about, JJ? Yes, this is what we do want. If we pull back to 151 flat on this 30-minute candle and we fail to break lower, that would still be a nice retest to continue back up. Yes. All right. I'm not saying we're gonna get that pullback, but if we do right now, but we have to be very mindful of how we react here, because don't forget, these are the new highs that have been created, and we're pretty much digging into that area essentially, So the initial 10 pips played out pretty well, and I want to be optimistic to give the squeeze to 0.200. But we also have to be objective enough to understand that we are sitting at that previous high, and we are digging deep into that price sensitivity area where we've had aggressive pullbacks here before. Okay, so but I do want 0.200 slap for all you guys who are in the buys. Anybody in the GU buys from 3868 when we're talking about this order block and price from here? That's running a lot smoother right now. That's running a lot smoother. That's almost at 30 pips. 387. Neil, you closed yours, but you at least caught it, right? Aduna 387 you entered. Z you entered. Not bad, not bad. Euro USD, we're watching this area still. US 30, keep an eye on it too. We're coming towards 31,900. Yeah, you caught it at the bottom though earlier before the session. Like a better entry, right? Yeah. Gold key levels are based on higher time frame price points and historical price points. Yeah, sorry. Yes, sir. All right, Euro USD. This is a lot safer on the intraday time frames. What price is this? 1.19. 1.19. I guess it's a bit high. We're starting to look for buys soon. You know what I mean? Like, this was a nice double bottom rejection here. Let's get some... Oh, come on, GJ. Pump it, bitch. Tap that shit, bitch. But we're starting to see potential EU buys. Even if EU like rejects here, then does a quick little pullback and then comes back above, it's still looking pretty good above 1.866. I'm just watching this minor lower time frame bear structure. If we break above there and still respect this support level, that we could start to take scalp buys right back to the previous highs, the 30 pip range, but I would like to go back to this medium term zone throughout the day to 1.195. But that's only going to come from if we have continued US dollar weakness. So we need US dollar. When you're looking at the dollar index standalone, I happen to have it on the 30-minute chart here. We need the dollar to continue down and break these lows. If we have that, our GU buys will be blessed and our Euro USD buys will be blessed. And we can observe that price action accordingly there, you know. GU's going nicely. On EU, I feel like we would get a quick break and retest of this broken structure. If we are to break higher, I feel like we would break above and retest this little minor price sensitivity zone quick and then continue up. But no safe entry yet. We're just reacting around that bearish structure and that 1 minute high point for now. We need to break above 886, you know. And GJ was about 5 pips from our 0.200 profit point, you know. Pretty close enough, 15 pips. We're digging deep into that area. I would love to break above it. But again, not a bad scalp trade, you know. Not a bad scalp trade at all. EU looking like it's setting up shortly. Mike, I think a lot of the stimulus has already been priced in the financial markets from the initial rumors. You have to understand, the financial markets are run by corruption, greed, and you always have investors trying to be ahead of the curve and be steps ahead, right? So that's why it's called buy the rumor and sell the actual news itself, because investors are always pricing in events before they usually even happen. That's why you've had all this market optimism and all of this recovery in the economic markets, even though COVID's still been active, you know what I mean? Or even though vaccines aren't even fully effective yet. Just with the talks of vaccines, investors already start making moves in the market. So I think a lot of the stimulus talks has already had its impact on the financial markets, and it's been priced in for that continued optimism that's been helping support the stock market, right? So yeah, that's what pricing in essentially is. It's just investor greed, always trying to stay ahead of the curve and follow that main rumor. And then by the time it's actual mainstream news, it has the opposite impact because the moves already happened. That's why that little phrase is called buy the rumor, sell the news. But here, this is what I'm talking about, where we're just getting that potential little pullback here. I don't see any safe buys right now just yet. I need a bit more of an impulsive break and retest of the zone. We're just reacting to it. So don't take any buys on EU yet. Gold, we're not touching still. We're only buying gold if it comes back above 1721 and we can validate this consolidation zone as buyer side liquidity and have another impulsive move to the upside. Or if we break below 1708, a deeper pullback to 1700 buys I'm looking for. I don't really want to stress fighting gold in this. You have to understand, gold did a 500 pip move in essentially a daily period. So to see it consolidate now, like 400 pips from like what, 1680 lows to like 1720 highs, right? So to see it consolidate now and slow down a bit, you can't be surprised. And it's best not to fight that consolidation as well or stress about it. This is looking a lot better now with that quick retest. GU's ripping it for you guys. I'm glad you got that entry. Hopefully you got to secure at least 10 pips. I would like it for you guys to get a 20 pip TP here, but that's not up to me. Let's just be very mindful when we're watching the price action. If we have some bearish candle closures below these bodies, we will come back down to 151. Otherwise, I see us slowly chugging our way up to 151.2, you know? So just be mindful of that. If you took 151 scalps and you got 10 to 15 pips, secure some partials, set risk free, and then just let it ride, because it's not like we are at a low point right now. We are going to revisit these previous highs, and we're digging deep into that area. You get what I'm saying? So just keep that in mind. GU's following the yellow brick road. Almost 30 pip trade. That's pretty solid. Same idea with GU though. If you guys are scalping it, then then obviously secure some partials and watch price action accordingly. Don't start to change your scalps into swing trades if that is not your style. Yeah. Yeah, I'll check these out, Samuel. Huh? Alright, if you guys got to make some money on GU or GJ, I want some W's in the chat. I want a like on the stream. I want some W's in the chat, and I want a like on the stream if you got to make a quick 10 pips or 30 pips on GU or GJ, because this London session's pretty shitty right now. Britain, London? What is this? Britain, London Police Assistant Commissioner says it's important that the what is some girl missing? Who's this Sarah woman? Sarah Everard. What's going on here? Some UK kidnappings? Is she famous or something? Or just like a child? Or it says woman. A police officer's been arrested for it? Someone tell me the story. Oh, she's a famous porn star? Shut up, Cam. Yeah, right. I was like, let's search her up, yo. Let's see the skill set. This guy, that's ruthless. Yeah, this is good. This looks like a potential better. Wait, what time is it? Oh yeah, new 15-minute candles, new hourly candles. Let me clean this up and zoom out a bit. I don't want to be impulsive, but I don't want to be impulsive, but I know we're waiting till 1721, but with the amount of rejections we're getting at these lows, if we were to break above 1716, this 1 minute rejection points, and come above our key level, I do see us going back up to these 1720 highs at least. If we come back above 1715, if we come back above these 1 minute rejection points. You know? If you guys got to make some money on GU or GJ, then it's best to stay out now. The volume's looking fairly slow and stagnant. It's always good to wait for further opportunities. Yeah, I'll check out the charts, no problem. Yeah, because I'm a little under the weather, this stream is not going to be as long as normal. I'm probably going to end it in maybe another 45 minutes to an hour, because I'm going to go to sleep, man. Alright? I only did it today, Wednesday, because yesterday, I usually do the streams Tuesdays and Thursdays, London. We do it every day in the private chat, sometimes at New York in the private chat. But yesterday, this XSplit broadcaster wasn't working. It wasn't allowing me to live stream. If you guys notice, some of you were there when I started the live stream, but then it froze and shut down. You know what I mean? So I just wanted to make up for that day. So we just ended up doing it again today. And then there's still going to be another live stream tomorrow, Thursday, as per normal. But then that's it for the week. I primarily trade London myself. I only trade 3 days a week. Tuesdays, Wednesdays, and Thursdays. That's why I started trading yesterday. Yeah, the live stream started for a bit yesterday, but then it froze. Like, it just, like, my whole screen froze. The broadcaster I used froze, and then it wouldn't start up again, so I had to stop it. And then today, I reinstalled the program and had support message me. So it was all good today, you know. But because I'm a bit under the weather, I'm gonna be this isn't gonna be running till like 5 a.m. You know, we'll probably watch markets for like another 45 minutes, and then I'm gonna call it a night and go to sleep. But I only trade. Sorry, I didn't answer that question. I only trade Tuesdays, Wednesdays, and Thursdays, and I primarily look for trades from about pre-London till about pre-New York. I'm not taking a shit ton of trades during that time, but that is the window of opportunity I look for scalp and intraday trades. So I trade Tuesdays, Wednesdays, Thursdays from about 1:30 a.m. Eastern is when I start looking at the markets pre-London hours till about 6 a.m. Eastern, if I can get a setup that I could potentially take, that I could hold into New York, you know what I mean? So through that, I'll probably take you guys see multiple positions when I showed you that $14,000 profit, but it was only about 3 or 4 gold buy setups. I usually just take multiple entries at a singular position, so I can close a position, leave positions running, or sometimes I'll have one position and close the partial lot, etc., right? But that gold buy setup itself, there was only 4 buy setups, like from the high risk, medium risk, low risk, and then I took like a random scalp just with the momentum during New York with it, you know what I mean? And then I'll try to be a hero and call some top, took a loss. I was like, why the fuck did I just sell gold? And then I stopped right there. But it happens, you know? So with that, I try to keep as much control in my trading as possible. There are always opportunities available in the market. This is a double-edged sword. Just as much as it can help you, it can also fuck you over. Because there's always opportunities in the market. There's always trades available. No matter when you pull up the market, you could find some trade opportunity, essentially. You get what I'm saying? If you really want to show yourself, oh, this looks like a good buy, this looks like a good sell. You get what I'm saying? But the market is like a casino where human errors and weaknesses get exploited. So just like a casino, the longer time you spend in the casino, the higher probability you have of losing or giving back your money. So if you guys have ever been, if any of you guys are high rollers and you start to make some good money while you're playing blackjack or while you're playing poker at the casino or anything, even if you're doing roulette and you're making a killing, right? As soon as you start to make a good amount of money, representatives from the casino come up to you and they'll start to offer you drinks, they'll start to offer you a dinner, they'll start to offer you even a hotel that's usually connected to the casino to stay the night. They're not giving you this stuff to reward you for taking money from them. They're giving you these things to give you more incentives to stay at the casino longer, because they know the probability is that if you stay longer, you're going to play more and you're going to give back. You're going to give back your money. You're going to give back your earnings and you're going to end up losing more. Right? So the market can be very seductive in that sense. We are not robots. There's only a certain period of time where we can remain focused and we can remain attentive and sharp while still making emotionally neutral decisions. Eventually, even though there's tons of opportunities available and you can get greedy and you can get impulsive, right? Subconsciously, you could be mentally exerted or exhausted and be making poor decisions without even knowing. So keep that in mind, right? We are humans, we're not machines. You can only run at 100% mental capacity and focus for so long before you start subconsciously starting to decline. So you should increase your chart hours and experience as much as possible. Taking active trades in the market and doing analysis and studying are two different things. The more time you spend actively entering and exiting trades in the market, the higher probability you have of losing. That same concept we're talking about with the casino. But the more time you spend doing analysis, studying the markets, back testing the technicals, following your trading plan, following a risk management plan, focusing on the risk versus reward, the higher probability you have of long-term success. All right? At the end of the day, a lot of people seem to forget that these 90% win rates that you see on social media, they're created to advertise and sell a product. Any type of signal chat or account management or these 90% win rate services or algorithms that claim 90% win rate, they're meant to target and sell a service or product to people that want money fast and conveniently, as easy as possible. And we know how that shit goes, right? So in reality, there is no such thing as a 90% win rate on your trades. That is extremely, extremely unrealistic. Even manual traders, manual professional bank traders, they did a study on manual bank traders, right? They're very successful. They make good money. They actually have a 50 to 52% trading win rate. Meaning if they take 10 trades, they win roughly 5 of them. So if they only have a 50% win rate, how are these manual traders making so much money? It's because their risk versus reward. Their winning trades are 5 or 10 times larger than their losses. They might be taking 5 wins, but it's 5 wins at a 1 to 5 or 1 to 10 or 1 to 8 risk versus reward. In a simple term, they're putting $10 risk into the market to make $100 return. So when you take 5 losses, you're taking $50 in losses. But when you take 5 wins, you're making $500 in wins. But it's still 5 wins, 5 losses. It's still a 50% win rate of trades. Crazy, right? Mind-blowing math, basic math. It's fucking insane. People go like, what? So when you follow social media and you put these unrealistic expectations in your brain of never taking a loss, of having a 90% win rate, you know what this does to you? This creates pressure to perform and will cause you to lose more because you have this pressure on you to keep taking wins without taking a loss. And as soon as you have a loss, you are not going to be able to process and take that loss as a business expense. So understand that. So any business, whether it's selling a service like Capital Hungry, whether it's selling products like a physical grocery store, whether it's like Uber, businesses have revenue and they have expenses. No business has just purely revenue and no expenses at all. It just doesn't make sense. The income of the business comes from subtracting your revenue from your expenses, and whatever is left over is your profit. But essentially at the core, a successful business has more revenue than expenses. Trading is the same way. In trading, you can't avoid the expenses. The expenses as a trader are losses. You can't avoid losses, but what you can do is manage your losses and make sure that you keep your losses small and planned to what you were like. If you plan to trade with a 20 pip stop loss and an 80 pip take profit, right? If you're about to get your stop loss hit at 20 pips, accept that loss at 20 pips. You planned that trade, you executed on it, you already assessed the risk you wanted to enter. Where people go wrong is when their stop loss is about to get hit, guess what they do? They remove it. They enter another position. They start to over leverage or scale in another position thinking it'll flip in their favor. Now, instead of taking a small controlled loss, they absolutely burn through their account or take a 20%, 30%, 40% loss. Right? Here's a way to visualize it when you're focusing on the risk versus reward. So if you're taking 1 to 3 risk versus reward trades, right? Meaning you risk 10 pips to make 30 pips, or you risk $10 to make $30, right? What you are doing when you take a win is, let's just say your trading journey is a straight path. Here's the start and here's the end, success. Every time you take a win, you walk 3 steps forward. Every time you take a loss, you walk 1 step backwards. It's going to take you 3 losses to get back to where you originally started. It's very hard to take 3 consecutive controlled losses. I'm not talking about emotional losses, aggressively entering trade after trade. I'm talking about taking 3 planned losses. It's very hard to do that. So with this concept, if you stick to a 1 to 3 risk versus reward, right? And you have a 50% win rate, and you take 10 trades, this means that if you're walking in a straight line, you take a winning trade, 3 steps forward. You take a losing trade, 1 step backwards. You take a winning trade, 3 steps forward. You take a losing trade, 1 step backwards. You take a winning trade, 3 steps forward. You take a losing trade, 1 step backwards. By the time you take 10 full trades and you won 50% of them, look at how much further ahead you are. You're creating bullish market structure in your life by moving 3 steps forward, and when you take a loss, it's 1 step backward. It's just a pullback. Because nobody's life is going to be a straight bullish line. Nobody's life is going to be a straight like arrow to success. It's going to be waves, just like the market. Sometimes you're going to hit some plateaus. Sometimes you're going to have off days. Sometimes, like for example, this is a bit personal, but at the end of 2019, on Christmas Day, my 20-year-old cousin was killed by a train right on Christmas Day. So on Christmas morning, usually when you're getting phone calls of like Merry Christmas from your friends and family, we got a phone call that like my baby sister got hit by a train pretty much. You know what I mean? This fucked up my trading for about a good month. I was trading during this time still. I didn't take in the mental impact that real world event had on me, on my mentality, on my psyche. So what I'm trying to say is, don't worry about that. Death is inevitable. The only things promised in life are death and taxes. But what I'm trying to tell you guys is, we are only human, right? We're not going to be feeling 100% confident all the time. Sometimes you might get in a fight with your girlfriend. You might deal with some bullshit at work. You might have some personal shit going on in your life. Whatever it may be, right? These things in your day-to-day life can impact your emotional psyche and your decision-making process in trading. Okay? So sometimes you might have a great planned trade, you might do great analysis, but you just might not be feeling 100% to execute on it. Do you understand what I'm saying? Or you might have all this great analysis, but you're not feeling 100%, so you end up taking a very late entry and getting caught in a pullback that stops you out. In the market, losses are 100% unavoidable. In the retail trading industry, we should learn to normalize losses. We should learn to normalize following risk versus reward, following having a 50% win rate. These types of concepts should be what's normal in our retail trading industry, because that's what's realistic. Having a 99% win rate, 90% win rate is not realistic. That just causes false expectations and pressure to perform, and it's going to cause you to lose. And you know what happens when you're on a great win streak of trades? When you finally make that one mistake, mentally you can't accept it as a small mistake or loss, and it ends up being a big mistake. Do you understand what I'm saying? EU 11 pips. GU still active for 30 pips. GJ, let's watch now. GJ might give us some more opportunity here, guys, because this is a new hourly candle. GJ might give us another scalp opportunity here. Now, again, let's be mindful that we are digging into this area back at those previous highs, and we did wick and reject there. You know what I mean? So we have to be very mindful of the 1 minute price action now at 151 PPL. If we don't break lower, there's still another scalp opportunity to continue right back up. But other than that, if we start to break lower with the rejection we've had at this high, I can see us potentially doing a more aggressive pullback again. And I guess it's best just to stay out of GJ, you know? Why force more trades out of it if we don't need to? Gold. So gold is also coming to that key decision point. It's coming back to 1715, but I won't see safe buys unless we break above these 1 minute highs at 1716. This could, instead of taking the buys at 1721, I do see a scalp just up to there. If we break above these order block 1 minute highs. Anybody take those Euro USD buys we were talking about? It got 11 pips. Anybody take EU? Right? At least you got to scalp 10 pips, you know? So just watch accordingly. I would secure some partials in that scalp range and then just let the runners go. Hopefully the new hour just continues bullish. We had a pretty nice hourly close there. And see here, GJ starting to break a bit lower, so let's just watch accordingly. If we just create a support at 151. All right, yeah. But does that make sense about the risk versus reward? That 90% win rate, those easy fast signals, this amazing new algorithm, there's always going to be a new algo. There's always going to be someone selling signals. There's always going to be someone flaunting some 90% win rate. These are all marketing tactics to sell a service or product, right? It's not really realistic to find success in your personal trading, to chase having a 90% win rate, trying to win 9 out of 10 trades you take. It just doesn't make sense. But it does make sense about following that. And think about it. That, what I was showing you guys about 3 steps forward and 1 step backward, 3 steps forward, 1 step backward, that's simply with a 1 to 3 risk versus reward. So for like a scalp trade, that's like if you have like a 10 pip stop loss, 30 pip take profit. You know what I mean? That's not that, a 1 to 3 risk versus reward is not a lot to ask. Even on like an intraday trade, like think about on gold, taking a 1 to 3 risk versus reward trade on gold. That's like a 20 pip stop loss and a 60 pip take profit. How many times do you guys see gold feed 60 pip trades, 100 pip trades? Right? So to be patient and properly wait to attack the market is critical. That is why you guys saw me last week. I only took 1 trade last week. I didn't really see anything clean. This week, I only took those buy setups, and you saw me make $14,000 in 1 day. Now, I could be making a shit ton more. I could be making a shit ton less. But a lot of confusion traders have from a psychological perspective that's sort of programmed in our brain naturally, and same for me, is we all come from, primarily 99% of us come from earning money through putting time into a job, right? 99% of us have got paid for our time. Our parents have got paid for our time. Our grandparents have got paid for our time. We have always had jobs that gotten paid for our time. Where you come into trading, you're now getting paid for your skill set. You're now getting paid for your knowledge, for your experience, for the skill set you have refined. You're not getting paid to trade 8 hours a day. So there's a common misunderstanding where people will come into the markets from having this regular earning mindset, and they think that if they just sit on the charts for 8 hours and take trade after trade, they should make money. That's not how trading works. Think about it. I didn't take a trade. Let's look at the average person. Before trading, and just last year, I was working at the biggest bank in Canada, Royal Bank of Canada. I had what all my friends and family and people around me thought was a great salary job. I was going in, driving into the downtown financial district. I was wearing a fucking suit and tie. I was making $70K a year, which roughly worked out to $4,000 a month, give or take. Okay? So think about that. This is a job that in society, I got quotations up, or to my family, or to my friends, you're like, wow, guy's working in a bank, fancy. Fam, I'll tell you guys, I never met more dumb motherfuckers until I went into this bank. I never met more lazy, unappreciative, low value motherfuckers than I worked in this bank. When I worked in the warehouse, there were harder workers when I worked in the warehouses and factories than when I worked in corporate banks. All right? So that whole status thing about seeing a guy in a suit and tie being rich or smart is fucking wrong. People are people. All right? So that's one thing. The second thing was I had this potentially such a great job that my friends and family were like, wow, bank job, suit and tie, financial district, downtown Toronto, biggest Canadian bank with a pretty decent title as well. But I was working fucking 40 hours a week, whatever amount of hours a month, doing rotational shifts to make $4,000 after 30 fucking days. Okay? And now, through my skill set and development in trading and patiently waiting to take advantage of a gold buy run, you saw me make $15,000 Canadian in one day. Think about, I'm not trying to show off, because this $15,000 to me is a lot of money. But to somebody else out there, this $15,000 is the fucking dirt or the gum on their shoe. It's not shit. This pennies. So I'm not trying to show off. I'm trying to tell you guys the perspective of how trading can change your perspective on money and on earning. You go from earning money from exactly. You get what I'm saying? So you go from earning money for putting time into a workplace and only ever getting paid for your time. No matter what job you had, essentially you're getting paid for your time. Every job is the same. Once you're working at a job and you get taught the tasks you have to do, you're pretty much just doing repetitive tasks 8 hours a day and you're getting paid for your time, right? But trading, you get paid for your experience, your knowledge, your skill set. It's all dependent on you. You can't just go to the markets and look for trades 8 hours a day, taking trades all day, and then fucking expect to make money. It doesn't work like that. So there's a common misconception that people will be trading all day. People trade every session, every single trade they're trying to buy, they're trying to enter. All of this is actually toxic to your trading growth. So following these false expectations of a 90% win rate, toxic. Thinking you're never going to lose in trading, toxic. Right? Always constantly looking for trades every day, every session, toxic. It's toxic. And I'm just telling you guys from personal experience. I've already went through that process of trying to be a hero and trying to over leverage. Guess what it got me? Burned accounts, crashed. I've already gone through that process of trying to follow these people who say they have 90% win rates. Guess what it got me? Unrealistic expectations, burning accounts. Right? I've already gone through that stage of trying to trade every session, trying to trade every day, over trading. Guess what it got me? Nothing but failure. As soon as I started to slow down the process and focus on the skill set, focus on the fundamentals and technicals, go back to just going straight penny lots. Because remember, this is me now, $14,000, $15,000 in the day. But when you come to the first post in this chat, you can't compare to me or want to do the same things I'm doing when I was making $1,000 in a week trading penny lots. Right? I was still showing the penny lot trades I was taking, not being embarrassed that it doesn't matter if it was a 10 lot trade. The concepts, the ideas were the same. Stop losses, where you're looking for targets, entry points, that didn't matter. You know what I mean? The trades you're gonna take and the process you're gonna follow is gonna be the same. Rinse and repeat. It's just that your capital and experience is gonna increase. So the same GJ 10 pip trade that you might have taken a penny lot now and you maybe made $10, or somebody took a 10 lot trade and they made $1,000, one day you could potentially be taking 100 lots on that same 10 pip trade. The same markets. You have to understand, through every single one of these 1 minute candles, you have billions and billions of dollars of liquidity moving through the markets. Right? So I had no problem sharing these penny lot trades I used to take when gold was at fucking 1300 2019. You know what I mean? I had no problem like sharing the fundamentals or showing like, hey guys, this is today I made $400. You know what I mean? Showing, hey guys, I'm not making, in the week I made $1,300. It's not hundreds of thousands of dollars. It's not millions of dollars, but hey, this is where I started. And the same way, look at this. The same way I made $400 here, and I only took 3 losses here, right? So look at this. $400, kept losses small, kept winners milked. Now, when you guys see this, what's surprising? I still only took 3 losses, but now because my capital and my lots have increased, my experience has increased. Now instead of $400 in the day, it happened to be $14,000. Instead of taking a $4 and $8 loss, it was a $500 and $900 loss. But instead of taking $50 wins, it was $5,000 wins. Right? There's too many people on social media that are ashamed to show the start of the process, that are ashamed to say they trade penny lots or they're starting from penny lots, which just doesn't make sense. It's like if you started going to the gym and you started bench pressing 50 pounds and then somebody comes to you and says, how much do you bench? Oh, 350. What the fuck? Why are you lying? Why are you embarrassed to say that you bench press 50 pounds? You just started working out. Nobody's expecting anything of you nobody's expecting you to bench 300. Why are you telling yourself that? So the lot sizes and the journey with trading is the same as like working out to me. You have to develop the muscles. You have to start from scratch. You have to develop a exercise plan that fits you, a diet that fits you, and that fits your lifestyle and goals. And then when you go to work out, you're not going to be developing biceps overnight. You're not going to be developing a 350 pound bench press overnight. Right? Just like you're not going to be trading 10 lots right away overnight. The only way you're going to be trading 10 lots overnight is if you have so much disposable income that you can start with like a 100K account. You know what I mean? Because you know how some people come from wealth. Maybe for some people out there, having a 100K account, trading account, is like having a $500 account to us. It might not mean anything to them because they come from wealth. But I'm talking about for the 99% of people that come from like an average financial background. You don't come from wealth. You have to treat it just like working out. You're not going to go to the gym and be Arnold overnight or even ever. You know how many people have been working out their whole life and you're not going to have that type of ideal physique, but you still work out though. Do you understand what I'm saying? So don't be shy to trust the process. Don't be shy to start from zero. Just like when I started working out, and you have to understand, I'm an Indian guy, so I have Indian genetics. You know what Indian genetics are? Fat bellies and skinny arms. Usually taller, lankier, skinnier bone structure, more of an ectomorph bone structure. But you put on fat at like your love handles in your stomach. You know what I mean? But you still have a skinny bone structure. That's like the usual generic Indian genetics. So I started out with shittier genetics. I started out 90 pounds soaking wet. And now look at me. I'm a fucking 6-foot god. Just trusted the process, you know? No, but you get the point though. You have to start, whether it's a business, whether it's developing your personal body, whether it's developing your personal finances, you have to start somewhere. You can't just go straight to 100. So hopefully those little mental reminders and the little the little psyche talks, they help people out, you know? What's a realistic lot size to use on $25,000 accounts? You could use standard lots and go up to like a 5 lot, but it depends on what your stop losses are and what you're willing to lose. Because you have to understand, with a $25,000 account, if you're using a 10 to 20 pip stop loss, if you take like a 2.5 lot and lose 20 pips, you're gonna lose $500. Are you willing to lose $500 of that 25K on one trade for a potential bigger reward? That's up to you. Some people aren't willing to risk or lose a certain amount of their capital. They only want to risk 0.5% or 1%, where some people are more or more aggressive. Some people risk 10%, 20%. It really just depends on you, what you're comfortable with, because everybody's financial background and everybody's value of money is unique to them. We all value money, but everybody's individual value of money is going to be individual. It's going to be unique, right? Hey, new to the stream, coming from Trading with Monty. And Wicks don't lie. I kept having this issue is that I keep holding drawdown. Yeah, you don't respect the markets and you're a scumbag. The reason you hold drawdown is because you have no respect for the markets and you think you're better than the markets. You think when you enter the markets, shit should just go your way because you entered the markets. So yeah, you're just a scumbag. You have no respect for the markets. That's why people hold drawdown so long. You can't accept a loss. You have to learn to accept a loss in your life and move on and take it as a lesson. You probably can't accept small losses or issues in your day-to-day life, you know? So when people hold drawdown for extended periods of time, it just shows the lack of respect to these vicious markets. Just as much as these markets can bless you and potentially give you such an unlimited source of income compared to the average job, right? It can also fucking destroy your life. It can also make you addicted to trading. It can also make you constantly flooding capital in the markets and losing over and over again. It is an evil bitch, and if you don't respect it, it's gonna keep fucking you like that. So you have to have a sense of self-worth. And when I say you have to have a sense of self-worth when you're trading, I don't mean you have to say, oh, I'm the shit. When I say you have to have a sense of self-worth, you have to know that when you're trading these markets, you're not worth shit. I'm not worth shit. Not just you guys, me too. I'm not worth shit. You're not worth shit. We are specks of dust trying to make a little bit of profit in these financial corrupt beasts of a market. All right? When you can have a sense of self-worth and understand that we are smaller than a speck of dust in these markets, and you can respect the market, then you won't be holding drawdown. You'll cut that loss short and wait to attack another time. But as soon as you have ego, as soon as you think the market, you deserve something from the market, that's when you get fucked. The market doesn't owe you shit. We aren't worth shit to the market. This is a beast. You're talking about $5 trillion circulated daily. It doesn't give a shit about your penny lot. It doesn't give a shit about my 100 lot. If I took a 100 lot or my 10 lot, it doesn't give a shit. When 99% of retail traders lose, it is because you have 99% of people following poor trading psychology. It's not because brokers are targeting people. It's because the 99% of people lose in everything in life. When you look at a professional sport and you look at the amount of kids that wanted to be a professional football player, professional hockey player, professional soccer player, you know, out of the hundreds of thousands, out of the millions of kids that train since their childhood to be a professional athlete, you know the percentage that makes it? 2%, 1%. What does that tell you? That means the 99% that try to be a professional athlete lost, failed. They didn't put the effort in. It could be due to experience. It could be due to circumstance. It could be due to effort, due to luck. Doesn't matter. It doesn't matter. You know how many businesses fail? 90% of businesses, no matter what industry, fail. 90% of businesses, not traders, businesses. So this concept of 99% of retail traders lose, it's not just in trading. It's in every industry, and it's in anything across the world. 99% of people are losing at everything. That's why 1% controls the 99%. That's why 1% of the world has more wealth than the 99%, no matter what industry or what field. You know? GJ, we're still creating a support at 151, but the buys to me aren't looking as good because of how we're starting to see the upside bounces getting smaller and smaller. I would be careful that if we break below 151, we're going to get a deeper pullback down. The initial buy plays ran pretty well. Yeah. If you guys want to learn how I trade, if you want to learn my view on the market, if you want to see my view on the world, Capital Hungry YouTube, like the channel itself here, you have trading podcasts on psychology. Right? You have fundamental webinars, the evolution of a trader, the different stages you go through in your trading career. Central banking system, debt slave, fundamental principles, greatest transfer of wealth, fundamentals on gold, oil, GJ, live scalping sessions, psychology webinars. Remember that whole webinar? Remember that whole topic about normalizing losses? Guess who has a 45-minute webinar on it? You can see all the effort that I've put into learning these markets and information I've shared along the way, from the free Telegram analysis channel to this YouTube channel. And you have to ask yourself, if I can offer this much content on a free live stream, if I can offer this much content on YouTube with all these educational webinars, right? Why are people still paying for the Capital Hungry private channel? It must be some crazy value in there, eh? Think about any generic marketer. Think about any generic marketer. Let's go to Q Banks. Let's see Q Banks. Q Banks has thousands of people that pay him. right? What does he give back to the community? Q Banks, 50,000 subscribers. Let's find any educational webinar on trading. Okay, so car, trader tech review, my $200,000 trade, car. How does this help you guys? Does this help you guys? Does this teach you anything? No, right? Let's go look at Astro Forex. Car, picking up a 2021 Rolls Royce. How I went from a Forex notepad to a fucking pro trader. Bugatti. Dubai trading floor. Talks with some random motherfuckers that nobody cares about. Trash. How, there's nothing in here to teach you about anything. Profits tequila in Miami. Remember, guys, we're talking about trading financial markets, real world economics. All right? Who else? Who do you guys want me to search up next? What's another big one? What's another famous one? IML? Does IML have a YouTube channel? I don't think so, do they? Oh, this guy's good. Mamba FX. Not, I don't mean good like good at all. I mean like clickbait as fuck. All right. Mamba FX. $100,000. Car. My Forex trading setup. $2 million mansion. Insane Forex trading bot. Day in the life of a millionaire trader. This is just straight trash. It's straight marketing. There's not one educational fucking webinar here. Right? But people believe these guys. People believe Q Banks, even though they're running on their own brokers. People believe Astro Forex. Which one? Jeremy Cash? I've never seen this one. I never heard of Jeremy Cash. Is he a good? Is he good? Jeremy Cash. 172K. All right. Holy, this is clickbait, man. Forex trading, crazy trading day. $9,000, $500 in 10 minutes. Forex lifestyle. How the Bible made me a millionaire. Fam, the Bible? What the fuck? This is using like Christianity marketing. This is like trying to take faith and religion. What the fuck? The Bible making you a millionaire. This is all clickbait. Everything is easy, fast. Who's next? Who's next, guys? Who's next? Daniel Savage, our boy Daniel Savage. Daniel Savage, 40K views. Fuck. Turning 3,000 to 30K. Funding challenge. Insane flip. Life of a Forex trader. 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 I traded my Lambo for this. Forex live trading and trade breakdown. Daniel Savage is the first one to show at least something about breaking down a trade.
YouTube Daniel Savage here.
So I'm going to give him a like for that. All right? Daniel Savage is the first one who's at least like showed a fucking chart. But still primarily clickbait shit. Cars, lifestyle cars, lifestyles, like, you know what I mean? This guy is someone who said he was good. Got some educational stuff here. Mr. Momo FX. But I don't know him. Crazy, right? And then you got me here getting fucking, I got fucking 10,000 subscribers. And you got all this. Not one clickbait video. Not one lifestyle video. Not one flexing video. Chart High podcast. Fundamental and technical breakdowns. Chart High podcast, you versus you. Evolution of a trader. Gold breakdown. Like, look at come on, yo, that's night and day. I think I should start posting my car and shit. Posting, like, flexing cash. Yeah, you're right. I'm probably just ugly. You know what I mean? You have a full GJ fundamental and technical breakdown. Look at, you want to see this? A timeline of GBPJPY fundamentally and technically. Like, why do I bother doing this? I actually feel like shit now. Look at all the shit I do and I give out to the trading community over a year. And like, why do I even bother? I get like 500 views on some of these videos, 1,000 views, and these guys are posting like a fucking rental car and they get 20,000 views. Why am I even bothering? See what I was talking about on GJ here to stay out of the buys now? Where it looked like the buy bounces were getting smaller and smaller so we could get a deeper pullback. Why do I bother? Like, it makes me so discouraged to like not even want to post shit anymore. I'm out here posting psychology webinars about normalizing losses in trading, about how our modern society does not accept loss. You know what I mean? I'm out here talking about like how we could be better traders, be better humans. Getting fucking 10 views. I'm out here posting gold fundamental and technical analysis. Calling that range down to 1700 before we were even near 1700. I'm here doing 4-hour live streams. Crazy. Look at all this information here. It's crazy. The Capital Hungry YouTube. The Capital Hungry Twitter, which posts headlines all day, all night. Not as much as the terminal. That's just for the private members. You know? Yeah, nowadays doing what's right feels like it's wrong. Like, because I'm not getting any traction or exposure for it. But everybody who's posting all this clickbait stuff and all this, like, marketing stuff, they get so much exposure and they get so much support. They get so many people. Have you guys seen these marketers' comments? Fam, have you guys seen the comments on some of my shit? People be like, you fucking scammer. I'm like, what the? And then on some of these, and then on Q Banks posting like some random $1 million US 30 trade once a month. Gets like fucking hard eyes. All this shit. It's crazy. But yeah. Anyways, guys, what time is it right now? 4:30. It's already coming up to Asia session close. I'm done for the day, everybody. I'm going to sleep. I'm feeling pretty sick. What type of clickbait video should I do? Someone said, bye, you're a whiny dude. Ashley, I don't care about women's rights. I'll dunk my balls in your mouth. So wrong person to say that to. You know, you're gonna get roasted in the chat. So it's not a good idea to do that. But anyways, everybody, I'm gonna catch you guys later. I gotta go to sleep. I'll see everybody later. Thanks, guys. I'll see you guys tomorrow night. Don't forget to rewatch this webinar for all the analysis that was shared ahead of time. You know? See you guys later.